I have with me Mr. Varun Berry, the Managing Director of Britannia Industries, to discuss its Q1 results and also how the rest of the year is expected to pan out. Sir, let me start off by asking that you witnessed a strong revenue growth in the first quarter. Do you expect this kind of revenue growth to continue for the rest of the financial year, considering rural demand is expected to remain strong?
I don't think I'll be able to forecast what's going to happen, Charlie. Truly don't know. But I do understand and I do feel that it's impossible to continue with a 26.5% growth forever. But right now it seems to be okay. We're still getting the same kind of demand from the market. So we are good. But at some point in time when things normalize, it's going to sort of get back to normal as well, the demand scenario.
Considering we are already in the month of July, how is demand actually panning out in this month? Is it as strong as it was in the previous quarter?
Reasonably good, Charlie. It might not be at the same peak that we were at, but I would say reasonably good.
I understand that urban demand is not as strong as rural, but at this point in time, how does urban demand look? Which are the cities which are more severely impacted at this point due to the lockdown, which has actually impacted demand as well in these regions?
Yes, there are some cities where there is clearly a slowdown. So overall, if you look at it, the urban centers are growing at a much slower rate than rural centers. So rural is definitely going to go back to the earlier glory of growing at 2 to 2.5 times, at least for us internally. Our rural growths are going to be 2 to 2.5 times those of our urban growths. And yes, all that's happening, whether it's Bangalore now, or it's Bombay or Pune, or even Delhi before that, Calcutta, all of these centers, Hyderabad, all of these centers have been in some way or form, constrained by a lot of issues. The pandemic has been raging in these centers. We've had issues on, lockdowns imposed in these centers, all of that. So we certainly see rural sales to be 2 to 2.5% higher than our urban centers.
How is demand panning out for dairy products, considering you actually launched lassi in certain parts of the country during the lockdown? Does it continue to remain strong as well?
Yes, dairy was, during the last 3-4 months, it's been really good. We've been growing really well as far as dairy is concerned. We've been growing well in bread, dairy, all of rusk, all of these products which are home consumption products have been doing extremely well for us.
Do you expect strong demand for your bakery products like bread and toast to continue, considering that, otherwise it sees a lot of competition from the unorganized sector?
Yeah, so 2 things. One is smaller players will, and especially smaller players who've got any kind of cash constraint will find it tough to operate in this environment. So we might benefit from all of those smaller players getting some kind of an issue at in these kind of circumstances, right? So that is one. Second is that in times like this, consumers do gravitate towards strong brands, and Britannia is the #1 most trusted food brand in the country. So we will get some benefits of that as well.
You mentioned that your high margin products actually performed well during the quarter. Can you tell us which brands actually did well for you?
No, so for us, that's not true. For us, it was the core, the staple brands, which are really our premium brands, so to say, which have been doing well. So our star performers have been Britannia Marigold. It's been Milk Bikis, Good Day, and our Nutri-Choice products. Those have been the 4-star performers, because one is they were doing well from a consumer standpoint, but the second is we also prioritized production of those brands above anything else. And then we started to bring in bourbon and Jim Jam and treat creams and treat fills and Chocolash and all of those brands in as well. And they've also done extremely well during this period. But those were the four blockbuster brands for us.
In the previous quarter, did you roll back your discounts or take any kind of pricing action? Also, do you expect to take a price hike going ahead for the rest of the financial year?
We did optimize our spends, right? So because we didn't have product on most brands, there was no point in advertising because there were areas where we were short on product. So we did optimize in the last quarter on advertising, sales promotion, all of that. We haven't taken any price increases, and there is no reason for us to take a price increase either because the inflation scenario is looking reasonable at this point in time. The commodity basket that we buy is in the first quarter looking like a 3% inflation, and with the monsoons being good and the fact that the rural economies are looking reasonably robust, the agriculture economy is looking reasonably robust. We don't think that there is going to be inflation which is more than 3 or 4% during the year. So at this time of the year, we are not looking at a price increase. But as we go forward, if things change, we will have to change our tactics and our strategy.
So, what are the expansion plans that you have in place, and for which products are you looking to expand your production capacity?
Yeah, so we are looking at three new factories, completely new greenfield factories. So one is in UP, the other one in Bihar, and the third one in Tamil Nadu. These are three greenfield factories which should probably get to commercial production in about 2 years. We are looking at enhancing capacities in our Orissa plant, which is in Khurda. We're looking at 1 or 2 lines. We've already got land. We've got a building. We'll have to expand the building and put the lines there. And we are looking at expanding our manufacturing footprint in Ranjangaon in Maharashtra as well. So those are the 5 that we are looking at. This is going to be for our core, right? So this is going to be the maximum number of requirement at this time is for our Marigold and our 50/50 brands. So it's going to be lines for Marigold and 50/50 and the other allied products like the cream cracker, the thin arrowroot, etc., etc. So those are the ones which are the prime candidates for expansion. Beyond that, there is a requirement for rusk lines. There is also a requirement for good day lines in a few of these factories. So that's what it is. But it's all for our staples, all for our staple products.
In the last quarter, you reduced your overall spends, including your advertising spends. When do we see a revival in your advertising spends? Is it expected over the next 1 year, or already have you started increasing your spends towards advertising?
Not 1 year. You can't have 1 full year of no advertising behind brands. So we've already started to spend behind brands, not for all our brands, but whichever brands have enough product now. So even today we are operating with maybe 4 days of inventory, right? Which is very low for a company like ours. So within those 4 days, there are some brands where we've got enough inventory. So for example, on Good Day, we've started to spend money now. On NutriChoice, we've started to spend money now. We still are not spending money on our Marigold because we are still hand to mouth. 50/50, we are still hand to mouth. So wherever we get inventories, we feel that we are fairly good in terms of getting our products across our outlets. We've got good distribution going, and hence we need to spur up demand. We've started to spend. So we might not be fully up there in terms of spends, but we are now back on air.
What are the kind of product launches we see from your end? Also, in the previous quarter, you mentioned that you reduced the number of SKUs due to supply chain disruptions. Currently, how many SKUs have been brought back to the market, and when do we see your full variety of products actually reach the market?
No, we are back to variety. We might not be at 100% variety, but we are probably back to 75% of our varieties in the market. And as we keep building our our inventories, we will try to get back to 100% variety. So I would think that within a month and a half, we should be at 100% on all our varieties being available across the country.
Currently, what is the contribution of e-commerce to Britannia's revenue, and where do you see it over the next 1 year? Do you expect it to significantly increase?
Yeah, so it's grown multifold. It's actually grown 100%, 150% on the base, but it's still only 1% of our total sales, right? Because the importance of the neighborhood store has also gained. Everyone wants to shop in the neighborhood store because it's right there, and it does all that e-commerce does. So I think the two channels, obviously the fastest growing is e-commerce, but even traditional trade has been growing fairly aggressively. E-commerce, I would think, would continue to grow at a very rapid pace. But even, let's say, 1 year down the line, it will still be, maybe 1.5% of our total sales, which is not small, which is large enough, but not large enough to make a huge difference to the way our business moves forward.
Considering most modern trade stores were shut during the quarter, is it justifiable to say that traditional trade completely ate into the modern trade share of revenue for Britannia? And for how long do we expect this shift to remain in the market?
Yes, the neighborhood store has certainly picked up the slack as far as whatever losses there have been within modern trade. But I think even within modern trade, there have been, some amount of, balancing that has happened. So there are two phenomena. One is overall modern trade is obviously not growing as fast. But within that, there are some modern trade chains which are growing much faster. So Reliance has been growing really, really well. They are executing very, very well. And then you've got, Aditya Birla, which is now called More, has been growing quite well from our standpoint. Obviously, Future has been a little tepid, and even DMart has been growing, but not at the pace that they've sort of the kind of pace that they'd set for themselves. So I think there's a little bit of rebalancing between because of their existence in certain cities. They are heavier up in certain cities which were locked down a lot more. They are more in malls, etc., etc. So Big Bazaar clearly is in a lot more malls, and malls were shut, and so hence they've taken a big hit on that. So I think there's rebalancing within modern trade, and then there is obviously some rebalancing between modern trade as well as traditional trade. And traditional trade, the neighborhood store has picked up some of the slack that exists in modern trade.
How was demand from CSD during the quarter?
No. So CSD, I would say, is tepid at this point. So I do think that it'll. They've had some policy changes and all of that, which is adding up to the slowness in the CSD. So the channels which are not doing well, modern trade one, second, alternate channels, which is all our transport clusters, railways, airlines, institutions, canteens, all of that, right? So that's been doing really badly, and CSD. So these are the ones which are dragging in terms of growth. But that's fine. These will become opportunities as we go forward, right?
Yes.
We are not stopping to knock at their doors. We are doing whatever is necessary to make sure that we keep putting our products in there.
Can you elaborate a little more on your distribution strategy, considering you've been focused on increasing your distribution in the Hindi belt of the country? Can you also throw some light on what is your strategy that you plan to follow in terms of distribution in the Hindi belt?
Yeah, so UP has become our second largest market, which is a delight because it used to be a very weak market for us. So that's one highlight. From a distribution standpoint, what we are seeing with the neighborhood store becoming more important, I don't think we're going to change our distribution strategy at all. We will continue to grow our rural distribution. We will continue to appoint more rural distributors in smaller villages, lower down the pop strata. All of that we'll continue to do. We will continue to expand our distribution in towns and villages where we are not available, which obviously is a focus on the Hindi belt. So all of that will continue. We will make sure that over the next 1 year, our total direct distribution goes up because that's what gives us the ability to execute. So I don't think there's any change in our distribution strategy. We will also continue to bring in focus on the newer channels like e-commerce, etc. I think we push more than our weight in e-commerce as well, and we will continue to execute that as well. And we'll keep our eyes open to make sure that whenever modern trade opens, we provide it all the impetus that is required to get it back to where it deserves to be.
Okay, so over the next 1 year, where do we see Britannia's direct reach in terms of number of outlets?
I would not be able to comment on my indirect reach because that's something which goes through the wholesale, etc. But the objective will be that our direct reach, from which was at about 21.5 lakh outlets last month, should go up by at least another lakh outlets by the end of this year.
Thank you so much, sir, for taking the time out to speak to us.